A woman sits at her kitchen table. Her laptop glows against the dark. She earns $100,000 a year. And yet, her bank account is nearly empty. How does someone who makes twice the national average still struggle to pay their bills? In America today, earning six figures was supposed to mean you had made it. The phrase six-figure income became a symbol of success in the 1980s. Back then, $100,000 meant luxury cars, big houses, and a comfortable retirement. But something has changed. According to a recent viral post that captured national attention, a $100,000 salary in 2025 now holds the same purchasing power as roughly $54,000 did in the year 2000. Meanwhile, the cost of housing, childcare, healthcare, and food has climbed far faster than wages. This story matters now because millions of Americans who believe they are doing well on paper are discovering the erosion of the six-figure salary did not happen overnight. It built quietly over decades. In the 1980s, earning $100,000 placed you firmly in the upper class. Adjusted for inflation, that salary would equal nearly $300,000 today. Through the 1990s and 2000s, wages grew slowly. But housing costs, education costs, and healthcare costs grew much faster. By 2019, cracks were appearing. Then came the pandemic. Between 2020 and 2024, housing costs surged. Home prices rose nearly 55% since the pandemic began. Rent increased more than 30% nationwide. By 2022, something alarming emerged in the data. More than half of Americans earning over $100,000 annually reported living paycheck to paycheck. In 2024, the Kaiser Family Foundation reported that average family health insurance premiums hit $25,572 per year. By 2025, that number climbed to nearly $27,000. Let us examine exactly how a $100,000 salary disappears. First, taxes. According to analysis by GeoBanking Rates, using 2025 tax data, a single filer earning $100,000 in a state like Oregon takes home approximately $70,500 after federal and state taxes. In California, the take-home drops to roughly $73,000. Even in states with no income tax like Texas or Florida, federal taxes and payroll deductions reduce the paycheck to around $78,700. Second, housing. The National Association of Home Builders reported that in early 2024, a typical American family needed to spend 38% of their income just to cover mortgage payments on a median-priced home. The government defines any household spending more than 30% on housing as cost-burdened. By this measure, millions of six-figure earners are officially struggling. Third, childcare. According to KPMG analysis, the cost of daycare and preschool rose 263% between 1990 and 2024. That rate of increase is nearly double the overall inflation rate during the same period. In 2024, the average annual cost of childcare for one child topped $13,000 nationally. In cities like New York or San Francisco, families can pay $40,000 to nearly $60,000 per year for infant care. Fourth, healthcare. The Kaiser Family Foundation's 2025 survey found that average annual premiums for employer-sponsored family coverage reached $26,993. Workers contribute an average of $6,850 toward that premium out of their own paychecks. Add in deductibles averaging nearly $1,900 for single coverage, and healthcare alone can consume a significant portion of income. Fifth, student loans. According to federal student aid data from 2025, the average student loan debt balance is now over $39,000. For those with graduate degrees, the numbers are far higher. Medical school graduates in 2024 owed an average of over $212,000. Not everyone agrees that six-figure earners deserve sympathy. Some argue that lifestyle creep is the real culprit. According to PYMNTS research, high-income earners are twice as likely as low-income earners to report that non-essential spending contributes to their financial stress. Critics suggest that people earning $100,000 simply spend too much on wants rather than needs. Others point out that geography matters enormously. A $100,000 salary in rural Mississippi stretches much further than the same salary in San Jose, California. According to Smart Asset analysis of census data, in San Jose, 87% of a typical family's income is needed just to cover a mortgage payment on a median-priced existing home. There are genuine uncertainties here. Some surveys suggest over 60% of Americans live paycheck to paycheck. Other studies using stricter definitions find the number closer to 25 to 30%. The exact figure depends heavily on how we define financial struggle. What remains unclear is whether wages will ever catch up to costs, or whether six-figure salaries will continue losing purchasing power. Behind these statistics are real families making difficult choices. A dual-income couple in Austin earning $120,000 combined might look comfortable on paper. But after taxes, childcare, health insurance, groceries, and rent, there is often little left to save. One unexpected medical bill or car repair can push them into debt. Parents report delaying having additional children because childcare costs are simply too high. A mother in New York interviewed by CBS News described paying $450 per week for daycare, making her family think twice about expanding. Young professionals postpone buying homes. Retirement savings stagnate. The emotional toll is real. A 2024 survey from the National True Cost of Living Coalition found that 2/3 of middle-class Americans said they were struggling financially, and most did not expect their situation to improve. Think of your salary like water flowing into a bathtub. Decades ago, the drain was small. Money accumulated. You could build wealth. Today, the drain has grown wide open. Housing, healthcare, childcare, and taxes pour out faster than income flows in. This phenomenon has a name: the middle-class squeeze. Families earning between $100,000 and $200,000 often find themselves in a financial no-man's land. They earn too much to qualify for tax credits and subsidies designed to help working households. But they do not earn enough to comfortably afford the basics. Economists at Bank of America identified another factor. Higher-income households often buy larger homes with bigger mortgages, higher insurance costs, and larger utility bills. The house you can technically afford on paper may still consume nearly all your income. This connects to a broader story about what it means to be middle class in America. The upper bound of middle class income now exceeds $100,000 in every single state. Six figures no longer means wealthy. It means getting by. Here is what we know. A $100,000 salary loses roughly 20 to 30% to taxes before you see it. Housing can consume 30 to 40% of what remains. Childcare, healthcare, and debt take more. Here is what we do not know: whether policy changes, wage growth, or economic shifts will reverse this trend. Now let us look at what might happen next. Scenario 1. Costs continue rising faster than wages. Healthcare premiums are projected to rise another 5 to 9% in 2026. Housing supply remains constrained. Without major intervention, the squeeze will tighten. Scenario 2. Inflation cools and wages catch up. Wage growth has been strong in recent years, roughly matching cumulative inflation over the past 5 years. But costs for specific categories, like childcare and healthcare, continue outpacing general inflation. Scenario 3. Policy intervention changes the equation. Proposals for universal childcare, healthcare reform, and housing construction exist. Whether they become reality depends on political will that remains uncertain. For individuals, the near-term reality is clear. Living on $100,000 requires careful budgeting, strategic decisions about where to live, and realistic expectations about what that salary can actually buy. The dream of a six-figure salary still holds power, but the math has changed. Understanding that change is the first step toward making better financial decisions in a world where $100,000 is no longer what it used to be. If this topic resonated with you, please subscribe our channel and watch our next video. The hidden costs eating your paycheck, what they don't tell you about taxes.